Is the stock market about to crash? What's going on, guys? It's Justin from Push from Profit. Hope you're having a beautiful day today. Now, in this video, we're going to be looking at a few stocks that I'm looking to purchase myself, as well as, what's going on with the overall market. Because one of the common things I say in a lot of my videos is you have to understand what's going on with the global economy and all the news events and catalyst events that could really shift the market as the market does move, right? So let's go ahead and talk about it. So right here behind me, we're looking at ticker symbol SPY, which is the ETF for the S&P 500, and we see that we have been selling off. We're hovering above this green line over here, which is a 200-day simple moving average. So we want to talk about what's going on, right? So one of the first things I wanted to share with you guys is this news article, which I think is pretty interesting over here. We have retired a word transitory. Powell inflation testimony shakes stock market, right? So just kind of give you guys a quick synopsis of what this headline is really talking about. So for almost the last, I would say, like 6 to 7 months, we had Jerome Powell, who recently just got selected for a second term in the Federal Reserve as the Federal Reserve Chairman. He has been saying for the last 6 to 7 months, inflation is transitory, meaning it's not permanent. This is just something that we're seeing for a short period of time, right? And it kept running with that for a long period of time. And as he was saying that inflation was rising up higher and higher and higher. And just a few weeks ago, I covered a video where we talking about the inflation report. And it wasn't just gas and groceries. It was pretty much everything that was going through the roof. And I'm sure you guys don't even need me to say this. Everything is just getting more expensive, right? And so today we had this headline where it says retired a word transitory. So this is a quote from Powell, and it says the word transitory has different meanings for different people. To many, it carries a sense of short-lived, and we tend to use it to mean that it won't leave a permanent mark in the form of higher inflation, Powell said. I think it's probably a good time to retire that word and try to explain more clearly what we mean. Powell also said that the Feds will be discussing a potential acceleration of its monthly asset purchase tapering, right? So basically, to kind of break this down, we're leaving away this word transitory for inflation, and the Federal Reserve is gonna be ramping up on speeding up its monetary policies, meaning we were already starting to taper and cut down on how much money was being pumped into the market with mortgage-backed securities and bonds, and we were doing that at about a rate of I believe it was 15 billion per month, right? And what was expected was, by June 2022 to then, once we slowly, stop pumping so much money into the market, then raise interest rates. Well, now the table seems like it's going to be turning, or rather just, plans are shifting. Things are going to be accelerated more where, tapering may actually be a lot more than just 15 billion for the month. We may stop pumping even more money in the market, and then raise interest rates as soon as even February of next year, right? So that's definitely something that's very concerning. Now, this is something I mentioned on the channel a few videos ago. I already mentioned that most likely we may have to raise interest rates a lot sooner than June of 2022. But of course, that did hit the market with a big surprise when we have stocks selling off, right? Now, if you guys didn't catch it, I did go live this morning for about like 20 minutes. I was live streaming some trades. I took a small position in Chegg, which is a ticker symbol CHGG, and I kind of want to share why I see value in that stock, right? Now, you guys see this stock that's like beaten down. It's like, why would you want to buy this, right? And I kind of want to just actually, let's go to a daily view. So Chegg is a stock that has just been doing absolutely terrible. We saw that in the last earnings report on the 1st of November. Things just looked, really bad. We had the stock pretty much just fall off the face of the earth. And now we're seeing kind of this uptrend. We did 8% today. You guys see I have a small position, very, very small position. And the reason I have the small position is because this isn't a day trade that I'm taking. This is more of a swing trade where I'm building my position in the reversal of Chegg, right? And that's just something that you do to mitigate risk. You don't want to pour too much money into a trade that you're swing trading, and then if it goes wrong, then you lose that capital. You want to slowly build a position into it, right? And so the reason why I'm slowly building a position into Chegg is it's just absolutely insane how much it fell from the bottom of 24.25 all the way from the top of 115 and 21 cents, almost 350% sold off, right? So, this offers a great return, going to the uptrend. Now, am I saying it's absolutely going to return 100% to the peak and offer a 350% return? Absolutely not. But I definitely believe that this stock has been beaten down to an extreme. We also have Jim Cramer, who let's go ahead and pull this news article over here, who actually today, he on the show Mad Money Lightning Round, mentioned that Chegg, as he believed, has come down enough. Right now, again, I'm not someone to take someone else's advice when it comes to trading or investing in the stock market, and neither should you. But he is a big figure that a lot of people look up to when it comes to trading in the stock market. A lot of people do enjoy his show, and he even mentioned his views on Chegg. But I would have to agree that this is definitely something that has been beaten down very drastically. And one of the things, I have a video on this channel, you could go and search for it after this video, where I talk about how the way I like to play earnings is this is a perfect setup for me. I love when stocks do really bad on an earnings play because oftentimes there's a overreaction to the bad earnings, and once things kind of settle down, cool off, we start seeing a reversal. So that's at the period that we're in right now. Now, if you guys are not familiar with Chegg and their business model, Chegg is pretty much the only reason why I was able to finish my degree. This is literally just a service for those of you guys that may not know, where you get free answers to your college questions. They also deliver textbooks, and it's just really pretty much just a cheat code to finishing college. It's pretty much what everyone does for the most part, right? And the reason Chegg has been really selling off recently is just because numbers have been down. We had the whole pandemic where a lot of individuals were not wanting to go into work, and on top of that, the CEO mentioned in an interview a few weeks ago, he mentioned that not only has it been individuals in the workforce, but students as well have really been declining their interest in going into college. Now, this isn't a new trend. It has been declining each year more and more as more students realize that maybe college isn't the best route. And I'm not by all means saying college is a bad situation or anything like that. Of course, there's trade schools, there's businesses, there's so many different options that individuals can partake in. And so that's pretty much what has been the trend for the last few years. But during the pandemic, it definitely accelerated that quite a bit. Now, in the beginning of the pandemic, a lot of people were buying up Chegg, but now we're at this point where people, for the last few months, people just haven't. They've just been selling off Chegg, and people just have not been going into college. We also had the CEO mention that professors are just assigning less work in college as they have in the past based on their research, and it could just be simply professors are feeling the fatigue as well with this overall pandemic. So definitely a play that I'm looking into. Not saying you guys have to buy this stock. This is just, something that I took a position in this morning. This morning on the live stream that I did, I also talked about my position in Tesla. If I could just spell it right over here. And of course, I typed too fast. I didn't register it. So we'll go ahead and click that, Tesla. Oops. And again, click the wrong thing. Wow. Such a klutz. So, I have this position in Tesla, and you guys could see pretty much where I'm at right here with this position in Tesla. I have about 15 shares at 1,043, so that's roughly around 15,000. So it's a medium-sized position here, and you see that it did fall from the peak of 1,243 after Tesla fell down and started bouncing off this support over here. That's when I initially took a position. I took a small position again, and then as it started going up, I started building into that position, kind of like what I'm doing with Chegg, right? And then I do have a stop limit, and the reason I have the stop limit is because recently we had scares of the new variant. I think it's called Omicron, if I'm remembering correctly, and That definitely scared the market the last couple of days. However, we are showing like a good bounce of as far as a lot of the tech stocks go when it comes to bouncing off from that news. And so I just put a stop limit simply just because I wanted to lock in profits where in either case, if Tesla were to come down crashing, it would automatically sell for me and I would make my profit. Now I do plan on moving that stop limit higher as the stock starts moving up higher. Now this is something that we talk about in the Push and Profit program, which is going to be in the first link in the description below, so definitely make sure to check out that video. But what's going on, we have a lot of things going on simultaneously. I also want to kind of show you guys something that's kind of interesting to me, and that's just the US COVID cases. So let's go ahead and pull this up. So we see here, let's actually look at a all-time view, and I like pulling this up. I actually like kind of looking at this. So we see, obviously COVID cases were kind of curling downwards, but if we, kind of zoom in real quick on the November 29th, 216,000 new cases. So we're seeing like a rampant, increase in cases, which is surprising but not surprising. I mentioned that obviously as we enter the winter holidays, cases start to rise, especially when people start gathering, and this is a temperature where a virus like this will thrive in. But we were curling down, and I believe it was due to a lot more individuals being vaccinated. Probably not going to so many social gatherings as we did last year. All of that definitely takes a big role in it. But we are starting to see cases spike up almost as worse as last year. If we go to November 30th last year, 167,000 cases. We're almost double that for November 29th. So it'll be interesting to see if this new variant that comes out, what is the case going to be with that? Right now, we're still kind of like really early with knowing what's taking place, because we do see there's like, they're saying that it is more, and I'm trying to think of the correct word, but it is something that is spread more easily and more rapidly. But we're not sure if it's something that it has more mild symptoms than other variants. So that's something that we're going to have to really kind of take or keep an eye on to keep our pulse on the market to see what's going to go on. Because, of course, if we have, cases ramp up crazy, then that could be potentially bad for the overall market. We have inflation, we have interest rates to battle inflations, and then, of course, imagine a whole another pandemic coming through. It'd be, catastrophic. It'd be deadly. So, just something that we got to keep our eye on. Definitely something I'm watching. I also wanted to share something interesting here. Michael Burry, who is famous for The Big Short, if you guys ever seen that movie, he's this guy who shorted the housing market and actually got it right in back in 2008. He started shorting the market in like 2005 or 2006, very early on. And then he timed that pretty nicely. But he dumped about a lot of shares in Q3 to guard against the mother of all crashes, right? Now, this article just reads that hedge fund manager Michael Burry, The Big Short, famed for always being a busy man lately. Let's just skip that. Sold a lot of shares in quarter 3, and that's because Burry believes the stock market is way overheated. All hype speculation is doing is drawing in retail before the mother of all crashes. And this is something that he, wrote in a now deleted tweet earlier this year. And he has like a lot of bearish bets on Tesla and Cathie Woods. Now, again, just like Jim Cramer saying, he thinks, Chegg is a good play. Although me personally, I do see value in Chegg. I never pay attention to what anyone else's thoughts are on the overall market, right? Because at the end of the day, you can't predict the market all the time. Maybe you may get lucky every now and then, like Michael Burry during The Big Short. But, the market moves randomly, right? And oftentimes trying to predict the crash is going to leave you, just burning a hole in your pocket because, the market is irrational, right? You could be thinking the market is way overbought, and it just continuously goes up. If we kind of look at QQQ over here, which is a, ETF for the NASDAQ, and let me go ahead and show you guys over here. If we go on a weekly view and kind of zoom out, this right here was where the crash took place, and we have just been going up and up and up. And of course, throughout the time, there's been, like a little pullback or correction in the market every 2 weeks. Of course, that's healthy for a pullback, or for a stock to continuously go up. But we just have been going up, making new highs. And one can argue that in 2020 August, the market was already way overbought, right? And someone could have said, hey, the market's way too overbought, the market's gonna crash. And guess what? They would have been wrong as the market kept going up, kept going up, kept going up. So I'm not a big fan of, predicting the market, and I'm more of an individual who just trades whatever the market presents, because at the end of the day, you could, be wrong because the market is irrational. This is also the same guy, we really give him a lot of fame and clout for shorting the housing market in 2008, but just a few months ago he took a really bearish position on Tesla, and let me go ahead and pull up Tesla, and that didn't work out for him a few months ago. Let's go ahead and show. Look at what Tesla has been doing in the last 3 months. And then after he saw that Tesla was doing really well, he came out with a statement saying, oh, that wasn't really like a long-term play. It was just a simple trade. It was a trade that, just went wrong. And, of course, we're all going to have trades that go wrong here and there. But the point of this message is that despite Michael Burry saying that the market is going to have this crazy crash, I wouldn't start, just shorting the market just yet. I wouldn't start selling everything just yet until we start seeing, stocks actually selling off crazy. Once we see stocks breaking below the 10% threshold, we start entering into a bearish market, then, lock in whatever profits you made in the year, and then, go into a defensive position. Maybe you want to stay all cash, right? Or maybe you want to short the market. I mean, there's multiple different ways to play it. But the message that I'm trying to really convey here is that, at the end of the day, I'm not going to listen to Jim Cramer, to Michael Burry. Everyone wants to predict the market, but, you're not going to get it all right all the time. And I'm definitely someone who 100% understands that. And hopefully you guys kind of get what I'm saying here. But yeah, these are stocks that I'm looking at. Tesla, I still have my position in. I'm building a position in Chegg. I'm also building a small position in Apple. Stocks like Apple, looks like it's just, and I do apologize for all the lines here. Let's take that out. Stocks like Apple just continuously going up. Now, Apple is something that a lot of people see as a big safe play. And so I believe that more people, as they start leaving the more speculative plays like SPACs, like ticker symbol DWAC, which was the Donald Trump SPAC, or maybe like AMC, or, all those speculative plays, they may start pulling out and going into stocks that they believe as a safe haven as Apple. And of course, if the trend is in an upward trend, it's still there, I'm going to go in and buy. There's no shame in buying, even if the stock is, at this high level, because it doesn't automatically assume that it has to come down right away, right? We have to see what really plays out into action. So that's just something that I'm watching. So we talked about Apple, we talked about Chegg, and we also talked about Tesla. But I do want to kind of look at some other stocks like Nvidia real quick. This is another stock that I don't have a position currently in, but this is a stock that I may possibly be purchasing in the next couple of days. I do want to show you guys that on the 4-hour review, it looks like we kind of broke out of this descending or this like little sell-off over here. Or actually, we could draw it a little better. Over here, we have this little descending triangle. We did break above it, so it looks like Nvidia could start, doing a more like catastrophic or just really bullish, optimistic play over here. And I know that's hard to believe, despite the fact that Nvidia is almost at all-time highs. But again, the message that I'm conveying is, although there's a lot of thoughts and beliefs that the market's gonna have this big crash, and I'm sure that when the big crash happens, I'm sure it is gonna happen. I'm just not saying it's happening right now, which is why, I'm not worried of, buying stocks right now. When the dips are here, I'm going to take action. And if there's still a big, strong trend up, I'll build a small position like that as well. But let me know in the comment section below what stocks you guys are watching. I definitely really appreciate it, because you guys sometimes put me onto stocks that I was not even looking at. And maybe whatever stocks you guys are looking at, someone else watching this video may see that in the comment section below. And with that being said, guys, again, my name is Justin from Push and Profit. Make sure to check out the links in the description below, and I'll see you guys on the next video. Take care.